guys, in today's video I'm going to share how I made 32% day trading a backside move on a penny stock. So this setup is great if you've missed the big explosive run up of a stock but can still catch the bounce the following days and have time to prepare your trade with a clear plan in advance. Let's go to the chart. So the ticker that we're going to look at is UGRO, and let's start with the daily chart. So this was a low float stock. 99% of my trades are low float stocks, which means there's a limited amount of shares to trade, which means it doesn't take a lot to move the price, which is why you can get these explosive moves. So this was its day one here when it's moved on high volume. It's done 163 mil in volume, and it's gone from around the $2 mark up to highs of around sevens. So I'm not trading it on this day. It then had a little continuation on day two, and then this explosive move here on day three, which was up over 2,000% by the end of this day. So I did actually do a video on this last week because I did trade it on this day, and I took 26%, which, as I explained last week, felt like a loss because it moved up over 2,000%. So yeah, there was a bit of FOMO there for sure. So what I'm doing now is I'm waiting for this stock to pull back and to play it for a first green day bounce setup. So the first day that it can bounce after it's retraced. So you can see kind of classing all of this really as it's day one. And then you've got this retracement on day two. We're still bouncing around quite a bit there. Another pullback here. And then I'm playing it on this day here for the bounce. So I'm going to explain why I chose to trade it on this day. I'm going to go onto the intraday chart on the 5-minute time frame to start with. So you can see here, this is its day one, that kind of consolidation on day two, and then that explosive 2,000% move on day three. So it's then in this retracement phase. I'm looking at it on this day here, pre-market. So if we can see here on that day three explosive move, let's just zoom in a little bit. You can see it found resistance at around this 670 area, and then it started to halt up and do that massive move there. So this area of say 1660s is now becoming support here on this day. So I'm making a plan to trade this the evening of this day so I can trade it the next day. So if I just zoom in a little bit there, ideally what I want it to do is hold this level after hours and pre-market, use this to risk off, and then trade it for a bounce. So that's my plan. So I'm watching it the next morning. I can see that after hours it actually broke the risk. And then if we go on to the 1 minute time frame, so on the 1 minute then, you can see pre-market on the day I traded it, it broke that risk even further. And my rule is at the moment not to take any trades within this particular setup within at least the first half an hour of pre-market, because I want to see what the liquidity is like. I want to see what the movement's like. You know, trading this early on is very risky in my experience. I have done it in the past and it's not served me well, so I like to let it play out a little bit. So I'm just kind of watching it around here thinking, well, you know, it's broken that risk, but if it reclaims, then I'm going to jump in and use this yesterday's low of day to risk off. So as it reclaimed the previous day's low of day, I jumped straight in on the first candle, this candle here, and I managed to get in at 1683, and it was quite a quick movement. I'm risking off this line, so it's like over a 4% risk. So I had to size down accordingly, and then luckily it just respected that risk and didn't come anywhere close to it after that. So the other reason why this setup works is because the volume was so high on its run up, and then there's a nice drop off, and then looking for volume to come back in where shorts can get squeezed on the bounce day. So I just sold pre-market. I sold some at 20, being that kind of nice round number of 20. And then as it came back down and it held, it held nicely the previous day's close, broke it slightly. But I took off some in the 18 area as well, just in case this didn't work, which is fine. I mean, I could have stuck to my PTs, but I kind of wanted to just lock in a little bit as well and then leave the rest for market open. So market opened, did what I thought it would do, had this nice explosive bounce, and just sold along the way really. My best sell was 27 something, and my average sell was 22.16. So, definitely left money on the table. Could have sold a larger chunk up here, but it's always the way. So I took a 32% gain on that stock. So just a good example of, you can have loads of FOMO here and then just wait for the bounce opportunity to present itself, which it doesn't always do. It can either continue its run, chop around, or it can just go all the way back down to where it came from. So it's always important to read the chart, see the signs that it can bounce, and of course get good entry and good risk. So if I miss the initial spike of a stock, which normally occurs on day one, which I miss all the time because I don't really tend to trade day ones. I find them too hectic and I'm not very good at them. It doesn't mean the opportunity is over. It just means that I need to wait for a different kind of setup to present itself within the same ticker. So in this example, yes, there was a 2000% move, which can give FOMO, but it just means the further it runs, the more likely this is going to have a really juicy bounce. So I just need to be patient and disciplined. So that concludes the month of March. It was a green month for me and my best trading month so far. So let's hope it continues in April. And thank you for watching.